G'day guys, welcome back to the channel. Hope you are all doing well. This is a bit of a different video. It's one that I've been toying with putting out for a little while now. But I want to have it in my YouTube stack just in case anyone ever wants to decide to sell their coins for some reason. They may need to financially, they may need to pay something off. They just may need to have that optionality. And if you sell, you want to make sure you're trying to optimize your returns. And that's incredibly difficult in Bitcoin because it's volatile and moves quickly. But there is so far through its life some sort of rhythm that may be able to be followed. And I'm just going to go through some ideas today that you can apply to your own decision making. If you want to put some orders in, or if you do, again, need to sell, these may be good times to sell and, of course, buy. They sort of work in polar opposites. Now, obviously, we're at Christmas, hence the Christmas cheer. Here, Merry Christmas, by the way. But 2023 has been a very interesting and incredible year, quite frankly. We had a very slow period of time in the middle of the year, but overall, we've had two giant runs. The start of the year, and as we've entered into this sort of last quarter, we've had an enormous run. And Bitcoin is poised in a very unique position because this has been its strongest ever year prior to the halving. Now there's a lot of speculation out there. Are we going to have an early top bull market? You know, are we going to dump after these ETF news, which is coming up in January? Are we going to break the diminishing returns concept or idea? There's 1,000 different people coming up with things, and that's just the nature of the world. You have differing opinions on everything that happens. But what you've got to do is make your own decisions. And all you can do, in my opinion, is use data and historic similarities to try to guess roughly on what happens. You're never going to sell a top or you're never going to buy a bottom. You'll get close, but it's very, very tough in the moment to make the right decision. And if you follow these metrics, if you tick these boxes, you've got the best chance of getting the highest sale price possible, or vice versa, the lowest price for a couple of them. Now, if you're watching this, you know that I may have had a conversation with you about some of these things. I'm putting this in play for many, many, many different people, and I truly think that this idea, this simple framework, is the best way to operate if you're looking for funds. So although it would appear that the halving has a huge impact on the price and the beginning of, say, a bull market, there are a lot of other ideas out there that indicate that it is based on liquidity, and that Satoshi was intelligent enough to time the bull cycle periods with election periods, with liquidity cycles, with refinance cycles for government bonds, and a range of other factors which just help liquidity and assist in Bitcoin's fast growth during its number go up years, which is historically in a 4-year cycle, year 3 and year 4. So, roughly you can see where these ticks are is where the halvings have occurred previously. And this is a volatility index for liquidity. And basically it appears that when we cross over a specific threshold in liquidity, we begin a bull market. And that's sort of been the case this year. We've come right off this low. We've had the lowest. It's been a funny year, as I touched on earlier, because we've had the lowest level of market sentiment ever. We've also had the lowest volatility ever for a lot of the year. Basically, no one's really done anything, and the price is up 180 or 170% or 160% or whatever it may be. It's been a very interesting cycle, and behind the scenes, liquidity has been easing. And now that the Fed has taken its foot off the tightening brakes, we've sort of shot up with liquidity, and Bitcoin has followed through on its promises. Now, why it's also an unusual year is because we've gone 230 days without a 25% plus drawdown. So basically this is the start of the year here, and we've just, it's literally, there's no other word to describe it, but it's basically up only. And this is a very unique period of time where usually we have these 25% drawdowns that occur. This one's a 50%. There's a whole range through here. Sorry, this one here was a 50%, this one here. And so you can see the build up, basically this builds up stacks of days, and hence the bigger the red triangle, the longer the period of time since we've had some sort of correction or larger correction to the mean. So are we going to get a dip before the halving or post the halving, or are we going to get a sell the news event on the ETF news, which may happen sometime in early January? No one knows. And so this is why it's much easier to not worry about these short-term gyrations that occur in a market, but to concentrate on a 4-year cycle and zoom right out and try to maximize your buy and your sell if you should you want to do so. Now, I wanted to put this in here because it's such a big change to the market. We haven't had this before, and I think that's why the market is so bullish and moving in such a positive direction at this stage. We've got all these ETFs. We've got the biggest money managers in the world about to start marketing campaigns to the boomers, to all the pension fund managers, to all the universities, to everyone who has any sort of capital that they are going to have exposure into the market to. All of these companies are going to pump Bitcoin. We're going to see adverts flying around. We're going to see sponsorships flying around. We're going to see Super Bowl stuff. We're going to see anything and everything that you can imagine is going to be Bitcoin ETF related in the next couple of years. And the exposure, we live in an echo chamber. We think the exposure to everyone is very obvious and prevalent. But basically, the majority of people have no clue what Bitcoin is or what it can offer. And with these guys selling the stats of what it's done in the past, there's no doubt it's going to capture so much money. And so this is why I say it's going to be a little bit more difficult perhaps to try to guess or gauge or look at past iterations of a cycle to gauge where the top might be, because you just never know who is going to be buying. To put that into perspective, we have people or entities, I don't know who these guys are, they're buying thousands, hundreds of Bitcoin a day at the minute. And we're not even anywhere near the sort of, hyperbolic mania phase of retail. And these guys are buying thousands, hundreds and thousands a day, and over the months, they're just accumulating. And it's just one of those phases where, it's a little bit nerve-wracking. It's actually great, of course, if you're holding Bitcoin, but if you're trying to time things, it can be a little bit scary. And this is where FOMO kicks in, and when the price can just leap up and give us a God candle. So you've got to be very, very cautious of who is thinking about buying. Now, I just told you that everyone is going to soon be a buyer. And this is just the US. This doesn't encapsulate the world. This asset is a world asset. So what am I trying to say here? All I'm trying to say here is if you decide to sell, make sure you must sell, as in make sure you're making the right decision. Because if you can, the longer you hold this asset, the better off you're going to be, the higher the price. Because it is a complete correlation of, inverse of all of the currencies around the world. And all of the currencies around the world are devaluing. So Bitcoin, in theory, will just go up forever and ever and ever. Let's look at some of these metrics that I would use if I was ever going to sell, or if I was, if someone asked me when a possible timing would be, this is when I would do it. So here we are on just a Coinbase chart, a weekly Coinbase chart. And I've marked out a few different things on this chart to help us to try to work out exactly where we are. Now, the first thing you need to take into consideration is the blue lines. These are the halvings that have occurred, and this is obviously the halving we're coming up to, and this is the proposed date of the 15th of April. So you can see here they're clearly defined, and as I said earlier, there's always this drop. There was a big one here, there was a big one here. Obviously this was COVID, and then we sort of chopped around after the halving and here as well before we really started our parabolic run. Now, what tends to be the case, and I think that a good bracket to put a high point in is between 40 weeks. This is exactly, I'll do a measurement for you. This is 40 weeks exactly. There we go. 40 weeks exactly from the halving. So if you can wait 40 weeks after the halving, that's the beginning of the window if you want to possibly sell. Then the next red line is 80 weeks. So that's the end of the window to sell if you're going to sell, in my opinion. Now, the green is the high bar, the high weekly bar for that cycle. Now, what you're going to say is, Luke, the last two cycles, one green bar was right near the 80-week mark that you've got in here. And the other high, you've actually not even got on the high, you've got it on the start of the double top. Now, why I did this was because my chart here works better if I put it on the high, on this mark here. But I think that this was the true high for the market because all of the other metrics, momentum, buying activity, retail involvement, whales accumulation, everything else that you can look at basically dictated that this was the high and that this pump here was basically Sam and some other, guys doing bad things, repumping the market to extract more money and empty some of their altcoin bags. That's sort of what I guess. So be that as it may, so let's look back. Last halving was here. This is COVID. Last halving was here. We ran up. Everyone started to get in. Paul Tudor Jones, Elon Musk, Michael Saylor. 40 weeks hit. Bang. Few weeks later, a month or so after the 40-week bracket to sell, the window, we hit the high. Then we went down and sideways for half a year. Then we managed to get another top, and the other top, ironically, is still inside the 80-week window. So if you waited, you still would have got another top. You still would have sold at the same number, nearly, which works fine. So we're into the current one now. This is us here. We're live. We are moving along at some serious pace. This is the halving. This is the 40-week. This is the 80-week. So this, somewhere up here, let's just pull this down. Somewhere up here, in this little box here, is where we are going to want to sell. Whoops. I think that's probably a little high. Let's say it's over here. Now, this trajectory that we're on, it's hard to believe that we're going to continue up in this manner. And I agree. It's very sharp, but in the end, there's a lot of good prediction market stuff to sort of say, I've put this in here from long ago, but let's put this over here just to make sure we've got a little box to work with. Why can't I select this, guys? I'm in strife. Let's get it here. Come on, you little shonker. Okay, put it over here. So this is our 40 to 80 week sell mark. We want to have a wide range. We want to go from 150,000 US to up to 500, just because sometimes crazy things happen. So this is basically how you would envisage this. You roll on, you've accumulated your position here, which is what we spoke about at the time. You bought the dips if you thought you could, or if you received gains, or you continued to add all the way through here. Historically, adding before the halving has been a fantastic time to add to your position, and it seems high now. I understand that. but we are potentially just at the start of the precipice of the bull run. We hit the halving, whether we dump before, whether we dump after, whether we don't dump at all, I don't know. All I know is that historically, if you sell between the 40 week and the 80 week, you've got a good chance of selling in profit. And that's the name of the game, if you have to sell. The key really is to hold for multiple cycles. Then you can really sell wherever you want and you got to be in profit regardless. But you need to understand how the cycles work. You need to get your head around, you need to basically drop everything you've learned previously about any market, about any asset, because they don't apply to Bitcoin. It's a whole new ball game, and you just need to look at the history and try to work out what is going to happen. Now, if all this is too difficult to do, which I understand it possibly is, it's a little bit more tricky. There's two other ways that I also look at and try to overlap all of these items together, which will help. The CBBI, I've spoken about this many times. This takes into account a hell of a lot of factors, and the most important fundamental on-chain data, I believe. So right now we're at a 62. This is the number that you want to be looking at. Let's go down and have a look. So where we were in between the 40 and the 8. Let's have a look here. The peak was at a 96, okay. This peak was at 100. This peak was at 98, which was there. See, this was the first top of the cycle that I told you about previously. And so now we're at 60 odd. You want to be selling over 95. So I'll say that again. I'm going to put this website down below if you want to make, when you're deciding, when you're feeling emotional, come to this chart, look at the number. If it's over 95, it's probably not the worst time to sell based on these metrics and based on history, okay? That's a really nice, simple way to think about it. If you want to look at something else, you can look at this price chart here. This is much more detailed and much nicer. Now, all of the details about this chart are below. You can read up on each of the lines and what each line color means in more detail. They've got the delta top, the top cap, the terminal price, the balance price, and the CVDD. It's worth reading. But basically you can come here, you can see the entire life of Bitcoin, well, that has been charted. What you want to do is come to the chart and zoom in like this. Zoom in like this. We want to get to a more recent period of time. So we've got the 2017 top here, and we've got the other top here from last cycle, which I spoke about. What I think you need to keep in here, balance price is going to be a good, if you hit this line, it's a good time to buy, yellow. Delta top, delta top's going to be a big number. Top cap, we have hit top cap before, we didn't hit it last run. So that's going to be another tough one to hit, so don't be holding out for that. But if you click those off, and you can click off the CBDD, you can basically keep these two lines on there in my opinion. You have the BTC price in black. You have the balance price, which is a buy zone. If it hits the balance price, you buy. If it hits the terminal price, you can consider selling if you need to. So that's where I'd be thinking about it. And obviously this goes up as the price changes. So what are we at here? So the terminal price today is 114,000. And as I just said, we've still got a long time to go in this cycle, assuming we hit the sales window between 40 and 80 weeks. That's a long time away. So we're just going to see where we go. And if the momentum, it's what I said earlier was it's very hard to deal with pushing the buttons to buy and sell when the emotions are running wild in your body. And that's why these charts are incredibly useful. Use the data to your advantage. Take the decision making out of your mind. You know the data is here. It is populating for you on the screen. Follow the data. Take your gut and your emotion out of the game. So if we're above 95 and it's on the red, great time to sell. So again, above 95, and on the red line or above the red line, terminal price line here on Look Into Bitcoin, good time to sell. If you're feeling aggressive, delta top hasn't hit. Top cap, let's take delta cap up. Top cap, very aggressive if you're going to hold. You could put buys on this line if sells in limit orders if you needed to. I will teach you how to do that perhaps another time, but it's pretty simple. You'd be looking at these. Now this says 315,000 currently. So the delta top, based on the history, and I'll just click out of this, the delta top has been good at hitting. If you sold the delta top every time, I mean, you'd still be holding right now, but that's fine. You would have accumulated a lot regardless. So this is just another tool to use if you need to sell. Okay. I think that's all you're going to need. I don't think there's any point in trying to complicate this anymore. It's already complex. So let's just go through one more time. Bitcoin worldwide. This is the halving clock. Work out the date of the halving. It says it here, April 16. I've had April 15 in my chart. I apologize. April 16, 2024. Measure 40 weeks out from there. Then measure 80 weeks out from the date. That's your open and close window to sell. Then go to the CBBI, and look into bitcoin.com and follow these two charts. I've got the links to both of these below. You click on them, you play with them, you have a look around, see what you think, okay? This is the easiest model to go on, in my opinion. The rest is history. Good luck out there. I'm going to leave you now with Trace Mayer. He was a huge impact for me right when I got into the start of this, and he's since vanished, which is very, very sad. He was a very positive voice and, smart, calculating voice on the space. But beside the point, here's Trace. Remember what you hold. Just remember what you hold. This isn't a fucking Telstra stonk or some shit stock. It's not that. It's not restricted by a certain market or a certain industry. It's not restricted by anything. It's not even restricted by geography. It's not restricted by laws. It's not restricted by anything. Just remember that if you are selling, the best thing you can do is hold it for 100 years and turn yourself into a legacy king inside of your family, multiple generations down the line. So here's Trace. Good luck out there. Stay safe. Be smart. And bye for now.
Because now the cost of protection has rapidly plummeted, and yet the return on investment from attempting to extort, it's just not possible. Like with the information age assets, they're increasingly fleeing into these areas where they can secure protection behind cryptography. And that's a big deal because now holders of capital, whether it's the ultra rich or whether it's someone in the developing world, they can now secure protection for their money basically for free using open source software. That's a huge, huge deal because our freedom is directly proportional to the amount of protection that we're able to secure for ourselves. And this is a huge force multiplying technology that we're able to use to secure that freedom. And at the end of the day, it changes the economics of violence, and it makes violence not very profitable anymore.